We're just starting to see, I think, the signs of an early turnaround in the property market. Certainly sales activity in May was up compared to a year ago.
It looks like the New Zealand housing market is starting to get back to normal after a big drop in home prices and a big rise in interest rates. So is the crash finally over for good now? The official interest rates went up by 5.25% and the home prices across the country fell by 18%. This is a big change in the way the market works. The home market may be about to take a big turn because of this, but to really determine the answers here, let's stick to the end and dive into what's going on with the Kiwi housing market. If you're wondering if the real estate market has hit bottom, recent trends point to a good change. When seasonal changes are taken into account, sales have gone up by about 19% in the last 3 months. But it's important to be careful with this rise because these kinds of recoveries from the market lows are usually short-lived and don't always point to a long-term trend. Along with the numbers of sales, the average price of a home has stayed pretty much the same for the past 3 months, which is another sign that the market may be stabilising. There are a number of reasons why this possible end to the downturn trend in the property cycle could happen. Banks are becoming more willing to give money. This is because the Reserve Bank has changed its loan-to-value ratio rule, and the Credit Contracts and Consumer Finance Act regulations have also recently been changed. Over 18% has been taken off the average price of a house, and the drops are even bigger in places like Auckland. The job market is still strong though, and average wages have gone up by about 17% since the beginning of 2020. Also, the cost of rent keeps going up. There's also been an interesting change in the way buyers act, with desire for existing homes over new ones. Some new build projects have lost deposits, and the price of building things are going up, which is one of the reasons for this change. A rise in net migration is also putting pressure on the rental market, which has happened before in the home market. Meanwhile, here's a polite reminder that if you find our content helpful, please go ahead and show us your support by subscribing to the channel. More and more people think that interest rates may have peaked, which gives us a better idea of how much it would cost to finance something in the worst case. This feeling is strengthened by the fact that a lot of workers are switching from temporary work visas to permanent residency, which means they can buy homes. When attempting to guess how quickly prices will rise in the coming years, it is important to recognise the underlying uncertainty in such predictions. They may give estimates, but they are usually based on guesses rather than solid proof. A lot of people think that house prices double every 7 to 10 years, but this rule of thumb alone can be wrong. Before deciding to sell their homes, smart property owners look at a number of market factors such as changes in inflation, interest rates and migration patterns. The idea that property prices go up and down every 7 years may be somewhat true, but it makes investing in real estate easier than it really is. To get rich through real estate, the best advice is simple. Keep the property for as long as possible and watch your spending so you don't have to sell when the market goes down. Investing in real estate is pretty easy in theory. Buy buildings, make sure there is a steady flow of cash, focus on your personal and family goals, and try to hold on to these assets for as long as you can. When we look at what we think will happen to average home prices over the next few years, it seems likely that they'll go up. It's expected that the numbers will go up by 5% by the end of the year, and by an even bigger 10% the following year. This makes people wonder what's causing these numbers to keep going up. A lot of different things seem to be important in this upward trend. Take a look at the record high net migration inflows, which don't include the original rush during the pandemic. This surge is important because it makes more people want to live in homes. On top of that, prices are going up in the rental market, which has an effect on the whole home market. It's also clear that incomes and saving deposits have gone up, which means that more people can now buy homes. Another important factor is the banks. The Reserve Bank and the government have eased the rules for lending money. It should be easier for people who want to buy homes to get the money they need now that the rules have been loosened. There may also be a change in the government in October, which makes the political scene seem to be changing. A change like this could lead to the return of tax rules, encourage renting housing, which would boost the housing market even more. Another industry that affects home is tourism. As the number of tourists increase, investors may decide to focus on catering to this group instead of offering long-term housing. This change could make it harder to find long-term rentals, which could encourage more people to buy houses. But it's not all going up. There are fewer new homes being built because many builders are going bankrupt and buyers are losing their deposits. People are moving towards existing homes because of this, especially in popular areas where new construction is still going strong. Also, buyers who have been on the fence since the beginning of 2021 are now starting to move. This could make even more people want to buy homes, but some things could slow down the rate at which prices are going up. Some of the things that could slow these rises are rising unemployment, which probably won't go above a 5% rate, and interest rates slowly going down. It doesn't look like there would be a big change in the number of homes that are available. More sellers are likely to come forward now that they have been out of the market since the end of 2022 because there weren't any buyers and they didn't have to sell right away. However, this doesn't necessarily mean that there will be a rush of sellers. The annual number of home sales, shown on a graph as a dark blue line, also shows how the housing market changes over time. This line shows the ups and downs, such as the rise during the pandemic and the following drop in 2021 and 2022. The graph also shows the 3-month moving average of the number of new property listings that real estate agents get every month, which is interesting. The number of sales and new listings went up and down together from 2007 to 2012. In the last 10 years, however, new ads have been going down. Even though sales went up between 2015 and 2017, during the pandemic, this association temporarily lined up, but it's important not to take these trends too literally, especially when extrapolating data from 2020 to 2022. At the moment, the number of new ads is going down, but I expect that to change as sales go up this year. But it's still not clear how strong the rise is. The graph also shows the number of ads on a real estate website at the end of the month. This number is shown on the right of the graph backwards. If sales go up, this product looks like it goes up, but it actually goes down in the numbers. This trend shows that as sales go up, the number of listings that can be bought goes down. We think it's important to point out these changes in listings, especially the record low numbers of listings in the middle of 2021. This played a big part of rekindling the FOMO, fear of missing out trend, which causes prices to skyrocket in the second half of that year. Even though mortgage rates were going up, net migration was going out, loan rules were getting stricter, and investors were being affected by changes in taxes. This spike still happened. For similar content, don't forget to share your thoughts in the comments below.